Okay, and we're going to jump into the hard question, the last question of the evening here. When was the first venture capital fund? Is it A, Roman Empire times, B, British Empire times, C, when the Industrial Revolution was really, really kicking, D, during or soon after World War II, or E was the dot-com bubble? Okay, so an A, and I got two A's, a B, and some C's. I asked this question. My wife, I tested this out with my wife, who's an educator, at dinner, and she said, I'm not supposed to ask questions like this. And my response was, I wanted to ask a question that didn't have a right answer on purpose so that I could teach you something and show you something you probably never heard of before. All right, so the answer is all of the above. Right? The answer is every one of those answers was correct, and we'll see how they get more correct over time. So we could point back to, I'm calling this one venture capital, where ventures in quotes. So if we went back to 1400s Venice, when Venice was the mercantile capital of the world. So Venice was this powerhouse business center and trading center. And so the beginnings of venture capital, the beginnings of the way we invest in companies and startups, you could date this back to this time, which I didn't even give you as a choice on purpose. And in this time, you think of venture capital as in the rich people in Venice could risk their money on filling a ship with goods to go trade. And then they would get a percentage of the spoils when that ship came back into the harbor, right? Months or years later. And literally, this would be putting something of value, putting Venetian glass on a boat, sending that boat off to go and trade with, let's just say Constantinople, or even further, maybe going up to the British Islands to go get tin, and coming back with a ship full of something of wealth, and maybe even going trading with the Turks and bringing back silk that had come across the Silk Road. Seriously. And so you could make enormous amounts of money if your ship came in. Literally, that's where that phrase comes from. Or the ship could sink and you lose everything. And so this idea of you put up money and you get a piece of the spoils goes back to this age of exploration and trade, right? All the way back before the Europeans were moving to North America. And then we fast forward 200-ish years and we get to the same basic model still running, slightly modified. So the logo on the left, if you don't recognize it, is the Dutch East India Company. And the one in the middle is the British East India Company, and the one on the right is the Hudson's Bay Company. And if we just go back to the Dutch East India Company, it was founded in 1602. The Dutch East India Company was the first company that sold shares to the public. It was the first time that anybody could buy a share in one of these big exploration companies, right? And it was chartered by the King of the Netherlands, and it was given exclusive rights to go trade in the East Indies. And people were actually buying a share, not in one ship going off and trading, but in a whole fleet of ships going off and trading. And in this case, a fleet of ships with an army. They brought an army with them. Same thing with the East India Company, the British East India Company. It was a shareholder company. Those shares traded hands on the proto stock markets. It was under a tree in both countries. You would trade those shares under a tree, and you were buying shares in a company. And if the company did well, as if they brought back, if the ships didn't sink and they came back with riches, you got a dividend from that. And then Canada was mostly settled and controlled and governed by private companies, by the Hudson's Bay Company. So that was 1602. The Dutch East India Company shut down in 1799. So a pretty long run, almost 200 years while that company ran. So that was venture capital, but in a public manner. Then we go on to the next kind of group of companies, and I'm going to use JP Morgan and Company as the kind of the best known of these. Still exists in some form. I put 1913 because that's the year JP Morgan himself died. But the JP Morgan Company didn't die. JP Morgan Chase is that company. Didn't start until 1895. There was something that Morgan was doing with a partner before that. But this was kind of the age. This is the Industrial Revolution. So this was answer C on there. And the way that things got funded back then was through these companies that acted like banks. They acted like merchant banks. And so it wasn't really venture capital in the form we use today. It was not public traded stock like was done in the East India Company. It was, again, rich people's money flowing through this entity, but they were acting more like a bank would act with loans and issuing some shares and issuing bonds. And it did not really the way we do things today, in a totally different manner. And then finally, we get to the World War II answer, which is the American Research and Development Company. And this is the first venture capital company in the United States. And this is really the first venture capital company in a form that feels like today's venture capital companies. And it was founded in 1946. It wasn't the same structure we use today, and we'll talk about that in some other future lecture. It had this really odd structure to it. But it was a VC fund. It was a VC firm, at least. And they invested in all sorts of different companies. It wasn't just tech. It wasn't like the ones in California. They were investing in all sorts of different industrial companies because it was the 40s. But their big investment that made them the most money was digital equipment. And if you don't know them, if that's not a name that's known to you anymore because it's gone, digital equipment was kind of the successor to IBM in the 70s, or in the 60s. They were the inventor of the mini computer. And they did incredibly well for a while until the PCs came out. We know who started this company. So this is now in an era where we actually can, we have the writings and we have people alive who know the founder of this company. His name was Georges Doriot. He's not famous. He's not well known. He was born in France, came to the US to make his way, wound up being an administrator at Harvard when they created the business school. Wound up having to teach because they needed somebody to teach management. So he taught a class called management. And it was apparently, according to his biographer, the most popular class in Harvard and the first class at Harvard Business School to use case studies. And if you don't know Harvard Business School, it's famous for case studies. And so he kind of came up with that idea as well. Brilliant guy, was CEO of a ton of companies and the first venture capitalist. And then every venture capital fund that started after that can trace their way back to this man. And so the next answer is a little bit past World War II, because the first venture capital fund in the form that looks and feels like what we do today was Davis and Rock in 1961. Exactly the same format as the current funds. And in fact, Davis and Rock didn't last. The band broke up after a few years, and Davis went off to found a fund called Mayfield, which still exists, still based in California. These two guys met at Harvard Business School, and they funded two companies, one of which you've heard of, which is Intel. And Intel was a spinoff of Fairchild, and Fairchild was a spinoff of another company. This is what made Silicon Valley. These were the companies making the silicon in the Valley. And they started it in Silicon Valley. The very first venture capital fund in the modern format was in Silicon Valley in California. It didn't like pop up there from New York roots. It popped up there from California. And then the second one ever was Greylock. The founders of Greylock was four people who worked at American Research and Development and said, we can do better. And so in 65, they left American Research Development and started Greylock, and it started in Cambridge. It was basically next to MIT. And they funded a bunch of things. They still exist now. They finally moved to California in 2009, but they were early investors in Facebook and LinkedIn and a whole bunch of other stuff. One thing to keep in mind in terms of scale. So when I said VC started in 40 whatever or 60 whatever or whatnot, yeah, in 1961, Davis and Rock was a $5 million fund. And yeah, in current dollars, that's a lot more than five. It's probably, 60 or 70 million dollars of value now, or maybe even 100 or something. But it was small. And the VC funds were small for a long time. So the last answer is actually true as well. So venture capital, the way we do it today at any significant scale, yeah, kind of was in the late 90s in the dot-com bubble. And so I have a whole bunch more charts, but I'm just going to pull up this one chart. If we were looking at the 60s, it would just be a sliver of blue. and the 70s would be a slightly thicker sliver of blue. And so this is billions and billions of dollars. It wasn't billions of dollars until like 89 or 90. And then it became multiple billions of dollars in the late 90s in the dot-com bubble. The dot-com bubble really was when venture capital became something of significance. And 2000 was the peak of that bubble, and March of 2000 was the peak of the NASDAQ. And a lot of money moved in that year. And we didn't get back there until 2020. So 2020, the year of the lockdowns, I don't have that on this chart either, but 2020 finally equaled 2000. And so we had a little depression in there in VC world, where depression is, only 10 or 15 or $20 billion moved. So it's a real industry now. It's a big industry now. Okay, but we were supposed to be talking about angel investing. And so what did angel investing look like before this? And it really didn't. So the way angels invest today is very much based on the way the VCs were investing in the 60s and 70s and 80s. The scale of the checks and the structures that we use, and pretty much everything we do now as angels in the United States, is basically what the VCs were doing back before the VC industry grew up to be big. And before that, before the VCs got started, before American research and development, but not much before, they were basically just rich men. Right? We still have this issue in venture capital where it's way more men than women, and it was of course worse back then. And so when you go off and look at how did the companies get started in the 50s? Well, they got funding from groups like the Rockefeller Brothers. And literally that's a picture from the Rockefeller Brothers website. It still exists. It's kind of a family office meets foundation. It's got more complicated since then, but it was 4 grandkids of Rockefeller. And they got together and started investing in companies. And literally they called themselves the Rockefeller Brothers. And there's a whole bunch of industrial companies that and that's where the money came from.